folks, Richard Reyes, Certified Financial Planner, Orlando's own financial quarterback, and I want to spend with you a little bit of time to talk about taxes. You've heard it once, you've heard it twice, you've heard it 100 times, especially when it comes to the financial business, that it's not what you make, but what you keep. And we are talking about taxes. Now, we're getting towards the end of the year, and I want to tell you about 5 things that you can do to save taxes immediately. And you have to do these things before the end of the year. Now, one of the things you have to understand is that if you don't do it by the end of the year, that's it. December 31st is your last day. The other thing you have to understand is that, hey, you spend 20, 25, 30 minutes. Yes, you have the possibility of saving $1,000 or even more, depending on how aggressive you get with it. So let's talk about number 1. First thing you need to do is remember, if you're over 70 and a half or even over 70 and a half, you have to take your required minimum distribution. And if you don't do it, it is very expensive penalty by the IRS. One of the things you have to understand is that the first required minimum distribution is always the most difficult, the most confusing. After that, it should be, at least for our clients, it's set up on autopilot. Number 2 is make your charitable contributions, whether it be cash or stuff that you have laying around the house. If you're not using it, give it to an organization that can use it, okay? And at the same time, you're getting the charitable deduction benefit for it. After December 31st, remember, it is too late. But again, give it to an organization that can actually put it to good use if it's just sitting around the house. Or actually, even if it's cash and you're giving from the heart, make sure you give it to a good organization. Now, one thing to understand is that we were in election year this year. None of the money you gave to support your candidate or candidates is tax deductible. And the IRS is pretty darn clear on that. Number 3, make sure you go to the doctor. Make sure you put your contributions into your health savings accounts, because all these expenses and these contributions are tax deductible. Now, one thing to understand is from the standpoint of how much is deductible. It is a pretty high. It is a pretty high percentage. It's 10% over your adjusted gross income is what's deductible. If you're over 65, it's still 7.5%. We'll see now with Donald Trump in the new tax bill that will probably take effect sometime next year if that changes. But right now, it's over 10% of your income is tax deductible. Number 4, make your contributions into your retirement plans, IRAs or any other plans. And if you have to do that by, depending on the plan, December 31st. And if you're over 50, you're able to put in an extra $6,000 into a 401k or that type of plan, or $1,000 into your traditional IRA. But you have to do that before December 31st. And 5, not only do I think about saving taxes now, but I think about saving taxes in the future. I love Roth conversions, and if you have a year where you had some issues with your income, whether it be you change jobs or you have lower income this year or whatever happened, or you have a lot of expenses this year, it might be a good opportunity to convert some of your traditional IRA into a Roth IRA. I'm a big proponent in tax deference, but I'm also a big proponent in tax free. So there does come a time where you just have too much money in tax deferred. So you sort of have to balance it, because at some point the tax comes due and it gets very painful and very expensive, and there's not much you can do about it. So, hey, here's a few, 4 or 5 different things you can choose from. And there's obviously more things. And if you're self-employed, there's obviously even more things. But this is pretty easy. Take, again, 25, 30 minutes, save $1,000 or more bucks potentially. And again, thank you for watching me here at Financial QB TV, and I'll see you in the next episode.